Volatility picked up this last week as the markets reacted to fears of lofty tech valuations, mixed data, including a significant jump in the Challenger job cuts report and the ongoing US government shutdown. The S&P 500 and the Dow Jones are on track for their steepest weekly decline in 4, whilst the Nasdaq is on track for its worst weekly performance since March. Meanwhile, the US dollar has pulled away from recent 4-month highs. But what should we be watching in the coming week? Well, I'm joined by Global Head of Content, John Kicklighter, to talk us through the week ahead. Thank you for joining us, John.
Thanks for having me.
So, as stocks have pulled back from record highs, what are the general market conditions we expect to, or we should expect to deal with next week? And what markets are you watching?
Sure. It's easy to get caught up in a little bit of volatility. We definitely do have some volatility, and we have been hurting for any kind of activity like this, especially if you're coming at it from a perspective of a trader who seeks out volatility. But I don't necessarily think that this is broad-based just yet, nor is it totally enveloping conviction. We do see the U.S. indices and global indices have been pulling back, and we are challenging the bottom of channels for the likes of the S&P 500 and the Nasdaq 100, the big heavy-hitting indices out of the U.S., but we don't have that critical break. We don't have that conviction of momentum. We are lacking for a clear motivation or a fundamental theme, which I am very big on looking for themes to warrant whether there's a probability of follow-through or not. And we don't necessarily have that really wide-reaching risk aversion. It seems to be more concentrated or focused in those assets that have outrun the others, like the speculative cadre. We have the indices at the very top of the list. That's why something like Nasdaq 100, concentrating those U.S. tech major cap companies, is seeing some of the more severe pullback. It's because it's been so concentrated. So it's a little bit of a pullback from the concentration of that risk on, but it isn't necessarily a reversal to the point of being full blown risk off, especially as we consider some of those aspects of seasonality, which are going to be a little bit challenging to build ahead of momentum in the opposite direction. Now, panic at the severe end of fear is unpredictable. And it can arise more abruptly and cover more territory or ground than, let's say, the opposite, greed or risk on. So you have to always be mindful of it, but it's also very important to realize that a lot of these capital markets generally trend higher over the longer period of time. Now, we do go through periods of correction, but those are the lower frequency and lower probability of the big picture spectrum. So we have to put it into these probabilities. But in general, I will be watching into next week what the major U.S. indices do in particular. I think that the Nasdaq 100 needs to be very closely monitored. But looking at the Nasdaq versus the Dow, for example, so the concentration trade, or the Dow, which is the major market caps, the blue chips, but the major market caps versus, let's say, the Russell 2000, which is the small cap index. And of course, it's very interesting to watch the dollar, because the dollar is really struggling to get any kind of key event risk to come across with the U.S. government shutdown still there. And I think that it's probably going to have the greatest potential of generating some of the key themes that we're currently lacking for.
So you briefly mentioned themes there. What are the most potent themes that could upend the calm in the coming week?
So we don't have a lot of clarity or a lot of pressure on some of the classical themes that we've seen over the past few months. So the trade wars have certainly pulled back. The pressure has been in the challenging of Donald Trump's application of trade wars unilaterally through tariffs, and that's at the Supreme Court. That's going back and forth, and obviously there's some delay or pause between the U.S. and China, for example, 12 months. So we don't have to really worry about that urgently, and the markets are going to move on. We also have things like the uncertainties with growth, and the lack of data out of the United States is making it very tough to see how the world's largest economy is doing. in these kind of turbulent, uncertain conditions globally. And while it is just the U.S., it does have a greater influence from the big picture global macro perspective. So the lack of data there is very challenging to generate some clear momentum. And that same lack of data, and also the brief gap that we have over the next few weeks between central bank rate decisions, means that monetary policy is probably going to take a significant step back as a possible catalyst as well. Now, there is one thing I will say is going to have a disproportionate possible influence in the markets, and that is the U.S. government shutdown. Now, obviously, it can continue to drag on, and I think it's currently the betting markets are at the 45-day mark that they're projecting, which would end next week. But the resolution of that shutdown will also potentially give us a risk-on response. So if it happens, let's say over the weekend, then we get into a Monday where we've already had a pullback this past week, then it can apply to that channel, and the technicals and the fundamentals can align nicely for a nice relief rally. I don't think that would necessarily lift the cap on the markets, and they can just comfortably go into a rally into the end of the year or anything like that, but it can offer relief rally because it takes one of the big uncertainties off the board. But that seasonality too, which is we're going into the 46th week of the year, generally risk on. November is usually risk on. As volatility starts to pull back, volume starts to pull back, that will have a big sway as well. So we're struggling with the lack of key event risk. We're waiting for some relief rally. I have a little bit of pullback on the risk trends, and we have seasonal expectations, which are all factoring into a very interesting, albeit low-key, kind of picture for what we have in the coming week.
So you mentioned there that we're going to be short on event risk, but I guess what would be the top event risk that we should watch out for next week?
So we do have, through the week, a number of interesting U.S. events. If they were coming across the wires, then I would say they were interesting. However, with the government shutdown, I think you have to kind of put them to the side. And we won't necessarily know when the delayed, let's say, non-farm payrolls or CPI figures are going to come out. They could come out immediately upon reopening, which I doubt, because it's going to take time to calculate and to distribute that content. So we'll have to keep tabs on that. If we're just going by what we know is coming out, it's a very light week. So Monday we have Japanese foreign exchange reserves, which isn't a big market mover, but it is important in the context of the capital flows around the world, relative monetary policy and interest rates, but also because of trade considerations. I'll watch that on Monday, but that's really one of the very few things that's on the docket for Monday. Tuesday we have some Chinese data, so we have Chinese loans, very important for growth assessment. We have UK jobs. And for the U.S., we actually have some data that will cross the wires. The NFIB business confidence indicator, which in the lack of perspective that we get from the official statistics, definitely want to see how that registers. And then ADP, which is the private payrolls group that has long competed with the non-farm payrolls, they have shifted to a weekly release, taking advantage of the non-farm payrolls absence. And there will probably be some more interest around that. So I'll be watching that. Wednesday's very light. Maybe watch Cisco earnings after the close, because that's going to give us a sense of AI infrastructure, which obviously AI is still a lingering theme, although not necessarily the bullish driver that has been over the past weeks. We have Thursday some Chinese earnings. Tencent, the largest of the the Chinese companies by market cap, definitely one to watch. UK GDP and the US monthly budget, which is certainly important in the context of the shutdown. And then Friday, a long run of Chinese data, the October figures, and we can also watch Alibaba earnings for Chinese domestic consumption trends insight. But that's about it. It's a very, very light week in known event risk.
Well, thank you very much for your insights once again, John.
Thank you.
For more videos like this, please do like and subscribe.